Hey everyone, welcome. If you're a commercial landlord, this is one explainer you really can't afford to skip. We're going to be talking about protecting your biggest investment. And believe me, it all starts with understanding one very specific and often totally overlooked risk. So, let's just think about this for a second. Imagine your tenant runs a small cafe. A customer slips on a spilled coffee inside their shop, and now there's a huge lawsuit. So who's on the hook for that? The answer? Well, it might actually surprise you, and it reveals a really dangerous gap in your protection.
And this is exactly what we call the landlord's liability gap. It's that murky gray area, that space of uncertainty between what your insurance policy is supposed to cover and what your tenant's policy covers. And let me tell you, inside that gap, your entire investment is just sitting there, totally exposed.
To put it really plainly, this is not some minor detail you can ignore. This gap is probably the single biggest financial risk you face as a commercial property owner. It's where a simple, everyday incident can just spiral into a financially devastating hit that comes directly to you, the landlord.
And this right here gets to the absolute heart of the issue. See, by default, the law sees you, the property owner, as liable for basically everything that happens on your property. That is, until you take very specific, very deliberate legal steps to transfer that risk somewhere else.
So how do you even start building up your defense? Well, it all begins with your own specialized insurance policy. I want you to think of this as your personal shield. It's that first critical layer of protection for your asset.
And that shield has a name. It's called a Lessor's Risk-Only Policy, or LRO for short. Now, this isn't some standard off-the-shelf business policy. It is designed specifically for landlords just like you. Its whole purpose is to protect the owner of a building who leases it out to other businesses.
Now, your shield is actually made of two essential halves, which is pretty interesting. On one side, you've got your commercial property coverage. That protects the physical building itself, the walls, the roof, from things like a fire or a hailstorm. Then on the other side, you've got commercial general liability. That covers you for incidents in the common areas. Think parking lots, lobbies, and hallways.
Okay, but here's the absolutely crucial point. Take a look at what your LRO policy does not cover. It doesn't cover the tenant stuff like their inventory or equipment. It doesn't cover their business operations. And most importantly, it doesn't cover that slip and fall that happens inside their leased space. That's on them. And this is exactly why the strategy of risk transfer is so incredibly important.
Right, so if your own LRO policy doesn't cover what's happening inside the tenant's unit, how in the world do you close that liability gap we talked about? Well, this brings us to the real core of the strategy. Legally and strategically forcing your tenant's policy to be the one that responds first.
The goal here is really simple when you think about it. You've got your shield, right? That's your LRO policy, your last line of defense. But what you really want is for your tenant's policy, their shield, to step out in front of yours and take the hit first. So how do we make that happen?
It all comes down to this one sentence, this single phrase buried in your lease agreement. And I'm not exaggerating when I say this is, without a doubt, the most powerful tool you have to protect your asset. By making it a requirement that the tenant names you, the landlord, as an additional insured, you are fundamentally changing the entire dynamic of who pays for a claim.
And here's exactly how that chain reaction plays out. First, the incident happens. Someone falls inside the tenant's shop. Second, that clause in your lease gets triggered, and your additional insured status lights up on their policy. Third, and this is the magic part, their insurance company is now legally required to step in, defend you, and pay the claim. And the result? Your policy doesn't even get touched. Your claims history is safe, and you don't have to pay a dime on your deductible.
So let's just pause for a second here. Ask yourself this question right now. Do you have a current, up-to-date certificate of insurance from every single one of your tenants? And does it clearly show your name listed as an additional insured? If the answer is no, or even I'm not sure, then you are just needlessly leaving yourself wide open to risk.
Okay, so once you've gotten that risk transfer strategy locked down, you can actually power up your own policy. And these aren't just, optional add-ons. I want you to think of them as essential upgrades that give you a level of financial protection that, frankly, every landlord should have.
First up, we've got loss of rents coverage. Look, if a fire or some other disaster damages your building and your tenant has to move out for 6 months, this coverage pays you the rent you're losing while the repairs are being done. Because let's be honest, your mortgage payments don't just stop because the rent checks did.
Without this coverage, this is what your monthly income from that damaged unit looks like. A big fat zero. All your expenses keep coming, but the income just stops dead in its tracks.
But with loss of rents coverage, it's a completely different story. Your income stream is protected. This endorsement is a financial lifeline that gives you the cash flow you need to cover your bills while the property is being fixed up.
Now, the second power-up is something called ordinance or law coverage. Let's say your building was built, 20 years ago. If it gets seriously damaged today, you have to rebuild it to today's building codes, which are always more expensive. This coverage pays for those mandatory and often shockingly costly upgrades.
So here's the bottom line. Without this coverage, your regular property policy might pay to rebuild your old building exactly as it was, but it's not going to pay for the new sprinkler systems, the updated electrical, or the ADA-compliant ramps that the new laws require. You could be facing a massive out-of-pocket bill just to get back in business.
Ooh, okay, we've covered a lot of ground. So let's pull it all together into a really simple strategic checklist, an action plan that you can use to protect your assets starting like right now.
All right, here are your key action items. 1. Confirm you have a true LRO policy, not some generic one. 2. You have to audit every single tenant's certificate of insurance every single year. Make it a calendar event. 3. On that certificate, make absolutely sure your name is listed as an additional insured. 4. If it's not there, you get on the phone immediately and demand they fix it. And finally, 5. Have a serious talk with your insurance agent about adding those 2 power-ups, loss of rents and ordinance or law.
You know, when it's all said and done, this is really the main takeaway. Being a smart, successful landlord isn't just about buying an insurance policy and then filing it away. It's about being proactive. It's about using the incredibly powerful tool of strategic risk transfer to protect what you've worked so hard to build.
And that brings us to the final critical point. Your insurance policy and your lease agreement, they are not two separate things. They have to be built to work together, hand in glove. When you get them aligned perfectly, they create this nearly impenetrable shield of protection around your investment.
So I'll just leave you with this question to think about. After everything we've gone over today, take a really hard look at your own paperwork. Is your investment, is it really as protected as you thought it was an hour ago? Now's the time to find out. Thanks for joining me.